warahmatullahi wabarakatuh. We are group 2 and we are gonna present Introduction to Accounting to Assignment 3. First of all, I would like to introduce my group member. My name is Jafar Asfat, 23043027, and it's my friend Diva.
I'm Diva Octavia, through 3043035.
And Sakina.
I'm Sakina Putri Tismayani, 23043053.
Okay, let's open the Excel. Okay. First is general journal. It will be presented by me. First is analyze purchase inventory. So the journal is inventory on debt and account payable on credit as 2,660, which is obtained from 0.74 times is 4,000. Second is analyze sales merchandise. So the first journal is the journal for recurring sales, namely account receivable on debt and sales on credit as 3,960, which is obtained from multiplying 0.90 by 4,400. The second journal is for recording the cost of goods, namely recording of first cost of goods sold on debt and merchandise inventory on credit as 1,800, which is obtained from 0.60 times as 3,000. And recording the second cost of goods, namely the cost of goods sold on debt and merchandise inventory on credit as 1,000.36, which is obtained from 0.74 times as 1,400. The third is sales return accounts. So the first journal is the journal for recording returns, namely sales return and allowance on debt and account receivable on credit as 180. Then the second journal is merchandise inventory on debt and cost of goods sold on credit as 120 to record the cost price. The fourth is purchase merchandise for cash. The journal entry is merchandise inventory on debt and cash on credit as 1,760. Fifth, the first sales journal is for recurring credit sales, namely account receivable on debt and sales on credit as 1,995. And the second journal is for recording cost of goods sold, namely cost of goods sold on debt and merchandise inventory on credit as 1,555. The next is adjusting journal, okay, or adjustment. In this transaction, analyst company has a salary debt, so the adjusting entries are salaries and wage payable on debit and salaries and wage payable on credit as 400. Second is in transaction, just in depreciation on equipment, so the journal entry is depreciation expense on debt and accumulate depreciation equipment as 200. And here's a C ledger or C account. So after recording in the general journal is done, the next step is to post each journal account that has been recorded in the C ledger according to debt or credit position. Then add up each balance in the account. And then there's a trial balance after adjustment. After all, here's the trial balance after adjustment. After all, accounts are posted to the C ledger and added up. The final balance of each account is transferred to the trial balance. record the balance according to the debit or credit position of the account. Then after everything has been transferred, add up the final balance for the debit and credit side. The final result is $41,015 on each side. Okay, the next income statement will be presented by Diva Octavia.
Okay, I will continue the presentation. In income statement, the first in the sales revenue account of 1,595 minus the sales return and allowance of 180. Cost of goods sold of 4,270, and the result is 1,505 as the company's gross profit. Then add up all the loads, namely depreciation plus salaries and wage expense. We get a total operating expense of 600. And then finally subtract gross profit and total operating expenses to get net income of 905. Next, equity change statement. Analyzed Co has initial capital of 27,000, then added with a net profit of 905. So the final capital of Analyzed Co is 27,905. And last, I will present the balance sheet. In the cash asset section, account receivable are added, equipment is added, then accumulated depreciation, equipment is deducted, and inventory is added. So total assets are 34,295. In the passive section, the first is liabilities. Account payable plus salaries payable. Obtain total liabilities of 6,360. Then added with the second part, equity, namely final capital of 27,905. From the result of this addition, the total liabilities and equities are 34,265. Next will be present by Kina. To Kina.
Okay, I will present the FIFO. The first is the cost of goods sold available for sale. First December, there is an initial inventory of 3,000 units multiplied by 0.60 to get an initial inventory of 1,800. Then there was a purchase of 4,000 units of merchandise at price of 0.74. So the cost of goods purchased on 3 December was 2,960. Then on 17 December, another purchase of 2,200 was made at price 0.80. So the cost of goods purchased was 1,760. Add up all the total price, so the total goods available for sale, namely 6,520. Next, goods sold. On 5 December, there were 4,400 units sold, deducted by the sales return on 7 December, then added with 2,100 for the transaction on 22 December. The total goods sold were 6,300. Next is ending inventory. In this method is 9,200 minus 6,300. So the total is 2,900. After that, to find out the ending inventory price, namely the first initial inventory of 0 units multiplied by 0.6, the total is 0. This is because in this method, the first item that comes in the first one that comes out. So for the ending inventory, the last price taken is 17 December and December. On December 3, there are 700 units multiplied by 0.74 to get 518, and on December 7th, 2,200 times 0.8 to get 1,760. So ending inventory is 2,900 with a total price of 2,278. For the cost of goods sold, this method is the cost of goods available for sale is 6,520 minus ending inventory 2,278. So they get a total cost of goods sold 4,242. Next is LIFO. First one is cost of goods available for sale. For the first, there are 3,000 units at price of 0.6, so the total price is 1,800. Then on 3 December, there were 4,000 units multiplied by 0.74, so the total is 2,960. And on December 17th, there were 2,200 units at a price of 0.8, so the total is 1,760. So the total of goods available for sale is 9,200 units at a price of 6,520. Next is goods sold. On 5 December, 4,400 units were sold, minus the sales return on 7th December of 200, and then added 2,100 for the December 22 transaction. So total goods sold is 6,300. So, and the inventory is 9,200 minus 6,300. The result is 2,900 units. Next is ending inventory. To find out the price of goods using this method, namely the initial inventory is 2,900 units at price of 0.6. The total is 1,740. This is because in this method, the last item entered is the first to be sold, so the cost price taken for ending inventories is the price of the item on 1st December. As a result, the basic prices on December 3rd and 17th are not used, so the total ending inventory is 1,740. And last one is cost of goods sold. Cost of goods sold available for sale minus ending inventory. So we get a total cost of goods sold of 4,780. Okay, back to Jeff.
Okay, that's all my group presentation. Okay, I will say thank you. Okay, Assalamualaikum warahmatullahi wabarakatuh.
Wabarakatuh.
Thank you.